I just want to make the video about 426. So SPY long-term uptrend, upward sloping 200 period, 50 period moving averages, intermediately broken out of a sideways channel and above that channel. So long-term trend is up. Intermediately, we're starting to head back up. Top two pre-market movers were Twitter, which was gap up, so no trade. X, which was a 20% gap down, no trade. So define that as a big gap. Twitter is over. Twitter's gap was over 7%. I'm qualifying anything over 5% as a big gap for me. So trades, I traded today. Trip, so long term. Consumer cyclical, long term downtrend. So fighting the long term trend. With a long trade here, going sideways for a couple months in a base. Or just kind of sideways range, wouldn't necessarily call this a base. So that's the setup. The trigger is getting above this 44 level intraday. We get above the level, so it could have been a spot to enter right here. Of course, I chased till the very end. 10:30 reversal, right on the dot. Bad trade. Also, volume's pretty shit. So bad trade. Fuel, penny stock, advertising. 52-week highs, pulled back to the midline, and volume started coming back in to resume the uptrend. So this narrow range day kind of shared the same highs as prior days. So the setup is narrow range day in an uptrending stock, kind of shared the same intraday level. Trigger is taking out that level 53 or 523. So intraday, we kind of make higher highs, higher lows into that level, so you could have been paying the breakout there. It would have been good. Instead, of course, I wait until we've gone too far too fast. We've also done the prior wide range ATR. So if you look at this wide range day, it was like 60 cents or 80 cents rather. And this day had done 80 cents. So where did I buy? After we had done the high of the day. So just right underneath it. So too far too fast, not enough meat on the bone. Some other good trades. LL had the smart, so we're in an uptrending stock, going sideways at 52-week highs. The setup trigger is taking out 53.41. Or excuse me, 23.41. This is a later day play. Maybe I'm not going to be around for this, but we do take out the level, kind of make the window. So prior resistance becomes support. There's the window right there. And it's funny how that happens, right? So good late day trade, but probably not for me since I'm usually in bed by that time. MDXG, on my video yesterday, you can see me look at this, hesitate, not say shit. The setup was just 4 sideways days. So MDXG's healthcare, which is a hot sector, at 52-week highs, just a failure at 52-week highs. So a failure to go up. It's kind of maybe intermediate pause in this uptrend. And then 4 sideways days, so short-term weakness with an inside narrow range doji, volume still way above average. So have this intraday level at this 1144, and then where's the next potential support was around 1108. So could have been looking for a counter trend trade here, or it would have been an intraday trend trade, but counter to the big picture trend. So open lower, but we test up. Lower high, so we break the opening range low right here. So any of these pops could have shorted, for 20 cents, but really risking 10 cents, 8 cents. Still 2-to-1 is a winning trade. So Sonos is another penny stock, communications. So kind of see this obvious level around the $7. I don't know. I have no excuses. I wasn't with it yesterday. I did look at this and I saw this level. I didn't even see it reach this far back. So this is a glaring miss. Now that I see it, so this is definitely over under level. Got to call this at least a 7. And so 1, 2, 3, 4, 5, 6 touches. right at the psychological $7 level. So the trend is sideways, but we've been kind of going sideways for 1, 2, 3, about 6 months underneath this level from over this level. So kind of an important level here in Sonos, right at a psychological level. So we open up above it, but I mean just barely. So under 5%. We're not calling that a large gap, still a gap, but we test above the level, hold above it, then we get above here, and what I notice is we go sideways for a good hour and a half. All right, so that's a good signal for a trade. So you could go long anywhere in there. It's a bit thin, but you can put your stop here, 23 cents. VWAP the longest away. It'll still come out with 1.5 to 1 at worst. Like if you bought at the top of this range, if you bought, let's call it in the middle, somewhere 20 cents to make 40 cents, 2 to 1. This is one of those trades that I had on my list for a while. So we're in a long-term uptrend till we had an exhaustion gap, clean swing back down through Keltner, and then pull back to sideways. This is the anti-pattern on the daily, anti-setup. The trigger is getting below this sideways range, going sideways at the midline. Low 117.81. This is a good example of too far, too fast. So we open, slightly down, less than 1% though. So less than 1%, I'm not considering a gap. If we do open up or down less than 1%, that's still within not being a gap to me. We do just go down too far, too fast, and this is a really good example of that. So was there a whole lot today? Maybe I missed a glaring trade, but it was a Wednesday, middle of the week, usually not the best trading day, specifically for me. I crunched through. I didn't really see a ton of setups going into tomorrow, but maybe I missed something. I really missed something, so I'm gonna do some more scans later, but keep our eyes peeled. But yeah, later.